Okay, it is another week. We continue with top-down analysis on next week. So if you're new, make sure you subscribe to our channel, and then we continue. So today we are going to start with the Euro USD, and then we'll see another pairs. Okay. So here on Euro USD, on daily time frame of this market structure, on daily time frame, let's do a top-down analysis from higher time frame. On day time frame of this market structure, you can see here on top, price take out this previous high. So we got liquidity sweep. After liquidity sweep, you can see price to break this previous low. Price break this previous low. So we get a shift here, structural market shift, very clear. After that shift, you can see when we draw a Fibonacci retracement from that point to this point, you can see price retraced back to optimal entry area. You can see price retraced back to that area, and then right now we are in bearish move. So our target for that bearish move, we are targeting this sell side liquidity. So expecting price to drop until that area. Price will drop until that area. Okay. Right now we are in bearish. Price will drop until that sell side liquidity. So that is general bias. That is general bias. So let us consider this current price. Let us consider this current price. We can start with spotting this previous low. Here we have break of structure. As you all know, break of structure means continuation. And then you can see price is just back to this daily supply. It tested very well, printed a engulfing candle, and it created that impulsive move from that high to this low. So right now, price is trying to create a pullback. Right now, price is trying to create a pullback. So that pullback will end where? Apply Fibo again. We apply Fibo, and then we know we are in bearish move. We're supposed to find short position. So short position you'll find around this optimal entry area, which is located on premium zone. So that pullback, it may end up here on that optimal entry zone, and then we'll find short position later. So right now we are trading counter trend for bullish. We're finding some entries, some buys until price it reach that optimal entry, and then later we'll find sells. Okay. So when we shift it to 4-hour time frame, on 4H time frame, 4H time frame, when you shift it to 4H time frame, 4H time frame of this structure, this kind of market structure. Very, very good market structure. On 4H time frame, here you got a liquidity, what? Liquidity sweep. Let's take out that previous low. After sweep, what next? You can see breaking of structure. Break of structure means continuation. Here you have clear breaking of structure. So you can see that it is impulsive move from this low to this high. So right now price is trying to create a pullback. Clear zone to find buys is discount zone. So apply Fibo again, apply Fibo again in order to get the clear discount zone from 50 to 1, and clear zone to find buys from optimal entry. So I have to wait price to retrace back to this optimal entry zone here. I have to wait price to retrace back to this optimal entry zone, and then wait some kind of market shift, and then we'll find buys from that point to this point. Okay. That zone, rate retracement to this area, then we'll find buys. Our target should be that high. Also, we have this inducement. You can see that firstly pullback, that is inducement. So price may take out that inducement and then later will continue with the bullish. So that is my view on Euro USD. We'll find that buy, and then when price reach that optimal entry on daily time frame, we'll find the reverse and then we'll find short position on that area. So you have two options on Euro USD for next week. Okay, another pair, you can see Goldie. Goldie also, let's start from weekly time frame. Weekly time frame of this market structure. Last week candle closed bullish for first time. Last week candle closed bullish. Also, it take out this previous low. So here you have candle closure below. So you have break of structure. As we all know, break of structure is continuation. Also on left side, you have this sell side liquidity, which is not yet swept. So break of structure means continuation. So we have to find sells until price take out this sell side liquidity. But for now, you can see price is bullish. So square is clear area to find sales on premium. So price has to buy and then later find sales. Shift it to daily time frame. On daily time frame, we have this clear market structure. We have this clear market structure. You can see price take out this liquidity. We have liquidity sweep, very clear liquidity sweep. After that liquidity sweep, that zone was very strong zone because you have resistance. Also, you have this fair value gap, have resistance in FVG on this zone. That hence price to drop aggressively. So from that point is where we get an impulsive move from that point to this area. See that impulsive? That is very good impulsive move. Also here you have another breaking of structure and continuation. So for now, price is on a corrective move. Price is on corrective move. I think when it reaches that optimal entry or premium zone, we'll find shift and then later we'll find sales. Our target will be on that sell side liquidity. Okay, so the bias is bullish until that optimal entry, and then when price approaches that optimal entry, we'll find reversal for short position. Okay, we'll find reversal for short position. Let us mark that optimal entry. Optimal entry. Let's pull it out. That is our optimal entry zone. Okay, and then shift your time frame to 4H for her time frame. 4H time frame of this structure, very clear structure. Yeah, very clear structure. You can see here price take out liquidity with high, also take out liquidity again, created a shift here. Right now we are impulsive move, very impulsive, aggressive impulsive move. And then Friday candle for her candle closed the bearish, but it rejected from this 4H fair value gap. It rejected from that 4H fair value gap. And then on left side, we have this buy side liquidity. On left side, we have this buy side liquidity, very good liquidity. Very good liquidity. So expecting on Monday, price may raise up to take out this liquidity. Then price may react from that optimal entry, wait shifty for sales on gold. Okay. When you shift it to lower time on H1, you can see H1 close the H1. Let us zoom it out very clear. H1, we have this structure on H1. You can see price take out this sell side liquidity. Price take out that sell side liquidity. After liquidity sweep, that candle mitigate for H fair value gap. That is for H fair value gap for HFVG. After reaction on that for HFVG, it printed that manipulation candle. That manipulation candle, which is very, very good indication for reversal pattern. So after after formation of that manipulation candle, price retraced back on discount area, and then we took some buys from that area target. We took some buys after that confirmation from discount area on Friday. Stop loss, it was around this low, and then our target, our first target, it was around this high here. That is our first target, and then our final target, it is around that high, another high. On left side, you have that buy side liquidity, that high. Okay, that is our next target. And then market was closed very early, very early. So that is our structure for now. Expect on Monday, price may open with a gap, maybe upside, because for her rejection for HFVG also closed with a rejection. When HE, it shows all indication for bullish. So expect on Monday, price may open with a gap upside, and then if there is no any gap, can wait for any confirmation for bullish, and then can continue holding buys until price reach that buy side liquidity, and then when take up that buy side liquidity, wait a clear shifty around that area, we find sells. When you get the confirmation for sells, when you get the shifty from that area, we find sells. And then targets can target optimal or point of interest on left side. Here have that OB, and then we have sell side liquidity here, sell side liquidity here. So expect it when price approach that point of interest, it may bounce, get pullback, and then continuation, pullback, and then continuation until it take out final liquidity. Until it take out final liquidity. So that is my view. That is my view on gold. I think it will be like that. Okay. So make sure you subscribe, share to each other, and see you on Monday.